Hello, this is Ronald with Indicator Vault, and in this video we are going to go over the Supertrend Hybrid indicator. And you can see I've got the settings pulled up, and fairly simple. The default settings I think are great. Obviously you can adjust some of them if you'd like. The main thing we're going to be looking at, as you can see here, is the red and the green lines, which indicate basically your stop loss and take profit levels to watch for. And so, what this indicator does is it is catching the trend, and it is going to be highlighting, in this instance, we're going to go over this price action here, this bullish move up on the daily British pound chart. So it's going to be just some bullish examples here, but obviously the vice versa is true for bearish. And I'm going to show some ways of go analyzing this price action from the daily and the 1 hour, how some trades could have been caught, and how using this not just for as a stop loss line to capture the entire move, which, as we can see, so far, getting in, you could have entered in here with the first blue arrow. However, I'm going to show why it's good to wait for some sort of retracement and then get in. But obviously we can see this massive move up so far has not been stopped out yet with the suggested trailing stop loss, as we are still continuing to ride this trend up. So we're going to kind of go back and forth some from the daily and the 1 hour, just breaking this down and analyzing this, and how this is not just great for a trailing stop loss, but it's good to know even when to not be in the market, because it's going to capture some consolidation zones, and basically just when price is going to be ranging, and it's going to be helpful to just find the clean entries, the clean setups. So anyway, let's just get into it. And we can see here I've got this demand zone marked out. I'm not including this wick just because of how large it is. Just a huge stop run here. No real volume in it. And so we've got that. Price goes up, retraces. We can see this barely touches into the demand zone, but we see here we've got the blue arrow, so it's already signifying to be looking for bullish moves. So as that happens, that's our extra confirmation along with this demand zone. And of course, even I'm not going to include this wick because, like I said, not much volume in it. But if we do from the body to here, we can see the 61.8, 75 fib levels line up with right around there. So let's go down to the 1 hour, since we have our higher time frame POI marked out, and we're already looking for a bullish uptrend. So here we are when price touches it for the first time and continues up. So we can just repeat basically that same fractal that we saw. We wait until price reaches our daily demand zone, breaks above it, and what do we have here? We've got this new demand zone. Price retraces into it and flies up. But what do we even have here? Right after the demand is validated, we now get that bullish entry signal. And this is not, as far as this price action, this suggested stop loss and take profit is not relevant to here. It's only relevant to the newest. But even the indicator does offer suggested price levels, depending on the trade you're in, of where to set your stop loss and your take profit. So just with this here, let's say you got in on the top with about a 57 pip stop, and you just had this riding this trailing stop loss the entire way with the indicator. If you just held it just for that, you're looking at almost 260 pips in profit. That's a 5-to-1 ratio. If you even just held for this one, if you even refined your zone even more, this, including these two is the more conservative entry, but we can see it still even hit the lowest one, which is typically what you do. That's a 32 pip stop loss. And until it hits here, telling you to exit, that's 285 pips. So just some very simple confirmations of supply and demand zones, and really just having kind of a no-brainer trailing stop loss, just letting the indicator do the work for you as far as when to exit the trade. Now, you could have exited here if you just used the 1 hour. However, remember on the daily, we have yet to hit. So if you got in here and was just framing your stop loss on the daily, you have actually yet to be stopped out, and you still would have been capturing all of this move up if you had continued to hold. But let's go back into here, and we can see a lot of ranging. See, we get this down signal. That's where we exited. And of course, we're still bullish. And actually, let me highlight this area, just all of this price action. And let's go out to the daily and tell you why we would actually not really be looking for any setups on the 1 hour here with these signals. So this is on the 1 hour, this is the price action I just highlighted. And we can see just lots of ranging, some big wicks here and then even down. But this is why it's going to range, because we're coming into this supply zone here. And while we are expecting it to be broken, it's not going to be broken until there's some consolidation and just some messy price action. And even on top of that, if we draw a fib from our most recent range that we're in, we are in the premium side. And so we actually can expect some retracements down and some sort of pushes down before the next expansion up. But again, we're not that you can't trade some of these moves down, but we are not interested in that. We are only looking for buys in here, because the daily, the higher time frame, is telling us that, it's reacted off of a great demand zone. And the Supertrend Hybrid is telling us to look for buys. So we are expecting this high to eventually be broken, but until it does, we can expect just some messy price action, and that is exactly what we're getting. So we can get some false signals. However, let me get this off of our chart now. And again, no real, even all these demand zones are not really causing any break of structures that would be interesting me to follow these signals and then have this set my stop loss for me. Only until here. You see, this is the last demand that broke structure. Obviously it gapped up here, but it broke structure of this high. So now this now has my interest. I want to see price retrace back into here. Again, if you got in on this candle, you would have been stopped at break even, just barely in profit. It does go up over 100 pips afterwards from the bullish signal. But we want to wait some until price dips down into it. And even eyeballing it, looks like it's a great fib level. And then we can even just wait for that price fractal again. Demand, up move, back into demand, never breaks it, and then continues up. So yeah, it does, lots of wicks here, and you could have been stopped out if you were using this. I personally would have been waiting for a fresh one to use, But again, you have the breakup structure. Just to reiterate, this fractal to be looking for. Back into it. If you get stopped out, you then have this one. Just barely comes to it, but comes down to the discount level of the range. Now we have the break above. So let's say you got in even a little bit conservative entry. Your stop loss below here, about 43 pips. And until price finally hits it here, that's almost 240 pips in profit. So again, another 4 or 5 to 1 R&R. But again, that's only if you were using the 1 hour indicator stop loss. That fractal of price action was right here. Could have caught that huge move up, but it would have stopped you out on the 1 hour. But again, remember, we are framing our trade on the higher time frame, still from down here, and we have yet to be stopped out. So let's actually analyze some of this here. As far as for our last example. So we have a big retracement here. And of course we could be looking for some sells, but again, this when the higher time frame and lower time frame are giving mixed signals, you typically want to sit out or just wait until the lower time frame is matching up with the higher. Again, the higher time frame is giving bullish signals. So if you want to take sells, they're typically going to be short-term moves. Of course, we have a large retracement here. But let me mark out real quick. The demand zone. You can barely see it, but I want to show it back here. This demand zone, it broke structure. That has not yet been tested. So here we have price comes into it. So now again, we've got bullish daily, and now we can now expect to switch our 1 hour, our lower time frame, to bullish. So again, we're not in a trade here unless we were expecting this just to be our take profit, and we would have gotten stopped out here. But now, daily bullish, 1 hour bullish, and now we get this bullish signal up. If you entered just at the top here, you never get stopped out, even here. And then about 110 pips until you get stopped out here, just barely, depending on spread. If your spread is super tight, you may have actually still stayed in. And of course, it goes even more until it actually does close below it at over 271 pips. So this is the Supertrend Hybrid indicator by Indicator Vault. And just some quick analysis of how to use it going, and I just went over the daily and the 1 hour. I personally like to even go down more to the 15 and 5 minute to refine even more my entries and my biases. You could even get some quick scalps, with these down movements, even if you, again, got in here and just had a long-term position for a buy, you would not be stopped out yet. But if you went down to like the 15 and 5 minute and caught some quick scalps for these retracements, you can compound your account super quick with things like this and just letting the indicator do the work for you. Even on here, down signal fills the gap. Even if you got in here until it hits over 600 pips. Even if you just blindly just enter it off of the indicator itself, 600 pips in profit until it finally hits the stop loss. So I hope this video was helpful, and until next time, best of luck trading.